During my final semester of engineering, I asked my dad, "Can we buy a car?" To my disappointment, he said, "We can't afford it right now. First, get your LLR, focus on landing a good job, and then think about a car." Curiously, I asked, "What's LLR?" He smiled and explained, "It's your learner's license. And it's not just for driving, it's something you'll need for life." At the time, I didn't fully understand what he meant, but I went along with it and said, "Okay, Dad." The very next day, I was eager to start. I asked where to get my LLR, and he laid out the process: register for it, undergo training, and pass the test. Only then could I get my driver's license. Watching my friends zip around in their cars fueled my determination. I had to get that LLR. Sitting behind the wheel for the first time was electrifying. After a month of practice, a few bumps along the way, literally, and more training, I finally passed the test and got my learner's license. 5 months later, I earned my full driver's license. On that day, my dad praised my efforts and gave me a piece of advice I'll never forget. Whatever you want to achieve, study it well, practice thoroughly, and build your confidence before taking action. That's when I finally understood the true value of LLR, not just as a license to drive, but as a mindset for life. But when it came to my financial journey, I didn't follow the same disciplined process, and it led to failure. Hello, friends. Welcome to my channel, LLR. Let's learn to reap. Here, I'll share life lessons from my personal experiences and financial journey. My goal is to help you avoid the mistakes that could cost you your hard-earned money. Stick with me for the next 10 minutes, and together we'll uncover the traps that often derail our financial plans. Let me tell you about how I fell into one of those traps and what I learned from it. We all have dreams, a secure future, a comfortable lifestyle, maybe even some luxuries. We work hard to make those dreams come true. But along the way, we sometimes stumble into financial pitfalls that drain our resources and derail our plans. In 1998, after completing my engineering degree, I faced challenges in finding a good job as a civil engineer. Finally, in 2009, I landed in a decent-paying position with a reputable construction company. By 2011, I started thinking seriously about saving and investing. In my village, investment options were limited to fixed deposits at banks or small savings schemes at the post office. The local bank manager was seen as a trusted advisor by everyone, so I went to him for guidance. He introduced me to a life insurance consultant from a well-known private bank. This consultant offered me a policy that seemed too good and attractive. I was impressed by the promises, and since the bank manager vouched for the consultant, I felt secure in my decision. Here's what the consultant promised. This policy is with 3-year lock-in period, no exit load after 3 years, only 3 premium payments, after which I could withdraw the money at any time, a minimum return of 15%, which is double than a bank FD offered, a guaranteed maturity amount after 3 years. The proposal seemed perfect and attractive. Again, my dream machine started and planned to use the 15 lakhs maturity amount to purchase land in 2014. Convinced by these promises, I took the policy in 2011 with an annual premium of 3 lakhs 33,000. So after 3 years, my investment will be 10 lakhs in total. In the year 2014, I finalized a land deal worth 17 lakhs, paid the advance, and committed to arrange the remaining amount within 15 days. I didn't realize at the time that I was heading into deep trouble. When I returned to the bank, the first shock hit me. The trusted bank manager had been transferred to another location. I began searching for the insurance consultant, but he was nowhere to be found. Finally, I reached out to the insurance company only to get another shock. I couldn't withdraw the money after 3 years. I needed to pay for at least 5 years. And furthermore, the current value of my investment was only 8 lakhs, far less than I had invested. I had put my hard-earned money into this policy without understanding the risks. I lost the land deal and the advance amount. The insurance company refused to address my concerns, saying the policy was market-linked and they never promised any specific returns. That was the first time I heard the term stock market. I spent 6 months trying to fight this, but eventually I gave up. They pressured me to keep investing, but I decided to cut my losses. I closed the policy, ending with a loss of more than 2 lakh and the interest amount on my invested amount of 10 lakhs. Wow, it was a disastrous day in my life. I was scolding myself that what an idiotic engineer you are. Voluntarily put myself in a risk and literally lost the dream of buying a land, also with huge loss of money. Even I kept that money in bank FD or post office, I would be having the return of 6% at least. That experience forced me to think deeply about my mistake. I started researching about insurance, equity market, and understood the investment risks. Lesson learned is always take the time to study and understand the risks and safety of our investments. Don't fall for the schemes of swindlers around you. With that, let's understand few basics about insurance and investment. Insurance. Purpose of insurance is financial protection against unforeseen events like illness, accidents, or death. Benefits of insurance is peace of mind, risk coverage, and sometimes tax benefits. Various types are life insurance, health insurance, vehicle insurance, etc. Investment. Purpose of investment is wealth growth over time to meet financial goals. Benefits of investment potential for high returns, beating inflation, and providing income through dividends or interest. Types of investments are stocks, bonds, mutual funds, real estate, etc. One of the traps I fell into was investing in unit-linked insurance plans, which combine insurance and investment as they promised. But this is where I went wrong. Why? Let's see the reasons. Financial planning. Insurance and investments serve separate purposes in your financial plan. Purpose. Insurance is for risk protection, not wealth creation. So the best choice for life insurance is a term plan. Return. Insurance policies do not offer returns on premiums. They cover losses, not provide income or capital gains. Costs and benefits. Insurance premiums cover the insurer's risk, administrative costs, and profits. No income is generated like in investments. Liquidity. Investments are generally more liquid and profitable than insurance, unless it's cash value insurance, which still isn't as profitable as traditional investments. Combining goals. When you mix insurance with investments, such as in endowment policies, the returns will be much lower, not even meet the inflation rate. The conclusion is keep insurance and investment separate, so each fulfills its role effectively. Most importantly, do not rely on others' advice when making decisions about your investments. I've spent the last decade for educating myself and gained some knowledge on all investment options, and I'm excited to share that knowledge with all of you in my upcoming videos. Stay tuned for more videos on my financial literacy. Thanks for watching. Let's learn together to reap the benefits. If you feel this video added some value, then please smash the subscribe button and like this video and share with your loved ones.